This video is a complete beginner guide to breaker blocks. We'll start by clearly understanding what a breaker block is and how it forms on the chart. Then I'll walk you through simple, real examples so you can see how price reacts around it. I'll also cover the most common mistakes beginners make when marking breaker blocks and how to avoid them. By the end of this video, you'll be able to use breaker blocks confidently in a simple way.
Now first, let me show you how a breaker forms and what it actually looks like on the chart. To identify a breaker block, the first thing you need to do is identify an order block. You cannot find a breaker without first having an order block. This explanation is going to be very simple and beginner-friendly. So once you have marked an order block, you do not enter a trade from it immediately. Instead, you wait. What you want to see is that order block getting disrespected by price. In simple words, you want price to move through the order block and displace it with strength. When price clearly breaks through the order block and closes beyond it with displacement, that order block is no longer valid as support or resistance. At that point, the order block turns into a breaker block. Let me show you how to approach the market to find one. The first step is to mark an order block. In this example, you can see a bullish order block. It is clean and clearly defined. Now we wait for price to come back to it. Instead of reacting from it, price pushes through the order block and displaces bearish. You can clearly see price moving through the entire order block with strength. This is the moment the order block fails. Once this happens, that same area is now considered a breaker block. When price comes back into this zone later, we no longer treat it as bullish. We now use this breaker block as a bearish confirmation for our trades. That is all a breaker block is. It is simply an order block that got disrespected, displaced, and flipped its role. Nothing complicated.
Now let me show you an example of a bullish breaker block so you can clearly understand how it looks on the chart. In this range, you can see that we first have a bearish order block. Just like before, the approach is very simple. We do not trade from this order block. We wait. What we are looking for is price to disrespect this bearish order block. That means we want price to move through it and displace higher with strength. As price pushes above the order block and clearly closes beyond it, that bearish order block fails. At the moment the order block gets displaced, it turns into a breaker block. Right here, this area is now our bullish breaker block. From this point onward, we no longer treat this zone as bearish. When price comes back into this breaker block later, we can now use it as a bullish confirmation for our trades. This is exactly how a breaker block looks. There is nothing complicated about it. A breaker block is simply an order block that gets disrespected and displaced. That's all you need to understand. Now let me show you some examples of how you can use breaker blocks in live market conditions. In this example, you can see that we first have a bearish order block. Normally, what we would expect is price to come into this order block, show rejection, and then continue lower. But that does not happen here. Instead, price shows no rejection at all. Price disrespects the order block and displaces straight through it. At the moment price displaces through this bearish order block, it is no longer valid. This order block now becomes a breaker block. Now look at the context. You can see that price is in a bullish continuation. Because of that, we can now use this breaker block as a bullish PD array. When price comes back into this breaker block, we can reasonably expect price to respect this level and continue higher. This gives us a very clean trading opportunity. We can place our entry at the breaker block, keep our stop loss below the low, and target the previous highs. And if you watch how price reacts, you can see how cleanly price respects this breaker block and moves straight into our targets. This is how breaker blocks are used in real market conditions. Simple, logical, and mechanical. Now let me show you a bearish example of using a breaker block in a bearish market. First, you can see that we have a buy-side liquidity sweep right here. This immediately tells us that, at least for the moment, our bias is going to be bearish. When you look at the higher time frame, you can also see that price delivery is already bearish. This alignment tells us that a bearish breaker block can work comfortably in this situation. Now look at what happens next. Before the liquidity sweep, Price had formed a bullish order block right here. After the buy-side liquidity is taken, price does not respect that bullish order block. Instead, price displaces straight through it to the downside. At the moment price displaces through this bullish order block, it fails. That failed bullish order block now becomes a bearish breaker block. This gives us a very clean setup. Now I can place my trade at this breaker block, keep my stop loss above the recent high, and target the lows. As price taps into our entry, you can also see that price sweeps some internal liquidity, or you can say generated liquidity, before continuing lower. And notice something important here. Just like before, price forms another bullish order block, internal highs get swept, and that bullish order block also gets disrespected. Once again, that gives us another breaker block. You do not have to trade this way unless you are comfortable with it. I am only showing this as an example of how breaker blocks can appear multiple times in a move. If I choose to place another trade at this second breaker block, I can keep my stop loss above this high, trail the stop loss of my previous trade to the same level, and target the same lows. Now watch how price plays out. You can see how cleanly price moves lower. This is how simple trading with breaker blocks can be when the context is clear. You can also scale into trades or add positions only if you are comfortable doing so. There is no need to force it. Breaker blocks are not complicated. They just give you clean levels to work with when the market shows clear intent. So this is how breaker blocks work in real market conditions. There is nothing special or complicated about them. A breaker block is simply an order block that fails and flips its role. Stop overcomplicating it. Stop trying to force trades. Wait for liquidity, wait for displacement, and let the market show you intent. If the context is clear, the trade will be clear. If the context is not clear, no setup is worth taking. Keep it simple. Trade what you see, not what you expect. If you found this video helpful, make sure to like it, share it with someone who needs it, and subscribe for more content like this. If you want to connect with me, you can join my Discord and Telegram. All the links are in the description. If you want to learn privately from me, the mentorship link is also in the description. I've also left prop firm coupon codes down there if you're looking for those. That's it for this one. I'll see you in the next video.